We'll move on in the program, and we're next up is Paul Westsells of Western Copper and Gold. I think I've known Paul for close to 10 years. One of the very first roadshows I think I've done with him was 10 years ago. I'm really excited. He's got Rio Tinto as an investor now. Mitsubishi recently joined the share registry as well. Massive project, copper gold in the Yukon. So Paul, please give us the latest, and what are you up to these days?
Okay, sounds great. Excellent. Well, thank you for that introduction, and we're going to keep the Yukon theme here with Western Copper and Gold. So Western Copper and Gold, single asset development company. We're developing the Casino Copper Gold project located up in the Yukon. We've been developing this asset for about 12 years. By far the past 3 years have been the most exciting in the company, and I'll be going through that. I will be making forward-looking statements, so please review before making any investment decision. Just a couple of corporate facts to get out of the way. I mean, we trade on both the TSX and the NYC American, so please review both of those exchanges if you're looking for things like volume. Most of our volume is actually on the NYC American at this point in time. We just brought in a strategic investment from Mitsubishi and also a top-up from Rio, and I'm going to talk a bit more about that. So with that money, plus the money that we started the year with, we're starting with $46 million in the bank, so that gives us runway for a number of years here moving forward. Share price, it's $237. It gives us a market cap around $360 million. In terms of shareholders, after Rio and Mitsubishi, we've got some good blue chip names there with Fidelity, Franklin, and Copernic. So I talked about the last 3 years as being by far very transformative for us. And really that started in 2020 with the issuance of a new resource, almost doubled the size of the measured and indicated. Issued a PEA in 2021 that was turned into a full feasibility in 2022. This year, the focus is on permitting. In addition to that, we brought in Rio Tinto and Mitsubishi as critical investors. I'm going to talk about that here shortly. That, of course, was certainly transformative in terms of the story. And this is also in a backdrop of copper going from about $2.50 a pound up to over $4. So, well, let's talk a bit about these strategic investments, because both of them they're a little bit different in that these are not just investment by these companies, but with both of these investments, we signed what are known as investor rights agreement. And so unpacking those investor rights agreement is critical to understanding really what these companies are doing. So in terms of Rio Tinto, they made their investment in May of 2021. $25.6 million for 8% of the outstanding shares. With them, we signed the investor rights agreement because they really wanted to do advanced due diligence on the project. So to make sure that that advanced due diligence was complete, we set up a technical committee that they sit on. They have a board observer, and that board observer can turn into a full board member if they increase their stake, and they have the right to second people into the project. Since this is an advanced due diligence project, they didn't need those rights forever. So those rights expire at the end of this year. So, when we're talking about Rio Tinto, and we'll talk about the work that they've been doing, they've finished the first step of that advanced due diligence. It's certainly, right now, it's sitting within Rio Tinto, and they're assessing their options in terms of moving forward. Mitsubishi. So Mitsubishi, we brought them in as a strategic investor about 6 weeks ago. Mitsubishi comes in for a very different reason. Rio Tinto operates a number of copper mines around the world. Mitsubishi owns a copper smelter. They are a minority partner in a number of copper mines around the world. They're interested in the offtake. So with that strategic investment, again, was a commitment to do some additional work. They sit on the new technical committee. They also can get a board member if they increase their stake, and they have the right to first negotiation on the offtake. Again, only for a term. So their 2-year term for that agreement, that expires in 2025. So in terms of the work plan, as I said, we finished the work with Rio Tinto. It's now sitting internally in terms of deliberations about what's next. Mitsubishi, we haven't started that work yet, but really it's around the quality of the concentrate. So obviously with Rio expiry at the end of November, that could be a very interesting 6 months here. We expect to be sitting down and talking about what's next with them relatively shortly. Copper, I could spend more than my 15 minutes talking just about the copper market. Lots of good things to say about it. I mean, this is a very hot market. There's actually, if you think about it, there's 4 M&A transactions in the major space right now on copper. Glencore, Teck, BHP, Oz Minerals, Newmont, Newcrest obviously has a copper component, and then more recently, Hudbay and Copper Mountain. Lots going on, and this is why. I mean, supply and demand fundamentals really are suggesting that we need a lot more copper. I mean, one of the statistics talks about 12 million tons over the next 10 years. We're going to be talking about Casino. It's a large mine. That's 150 mines the size of Casino. I mean, it's just astounding the amount of copper that we need. If you look at Wood Mackenzie, when they talk about energy transition metals, the number 1 on their list is copper. The deposit itself is copper primarily, but it's copper gold. Gold is a significant portion. The other metal there is molybdenum. Molybdenum is another critical mineral, not talked about much. Didn't used to talk about it. I talk about it now because it's doubled in price over the past 2 years. In terms of overall resource, you're looking at 11 billion pounds of copper, 21 million ounces of gold. What does that mean? How is that significant? This is looking at the world of copper gold projects. So this is every copper gold project in the S&P database sorted by size. So shown there in brown are the ones that are controlled by junior mining companies such as ourselves, and in gray are the ones that are controlled by the majors. We are the 5th largest copper gold project controlled by a junior mining company. Why is that important? Well, you know, one of our goals, I mean, this is a multi-billion-dollar project. This is a project that really we're developing to a certain point and then looking to sell. When you're talking Rio Tinto, when you're talking a major copper producer like that, they're looking for 4 things. They're looking for size, which we have here, good jurisdiction, obviously we have up in the Yukon, and the next 2 are economics and social license, and I'll be talking about those here shortly. The other way to look at this is as a gold deposit. Just the gold puts us as the 8th largest gold deposit controlled by a junior mining company. 21 million ounces is pretty rare to find in a deposit. So let's talk about the project. You know, we issued a feasibility study on this project that came out less than a year ago, came out June 2022. So we are talking reserve here. The deposit itself is oxidized, so the surface is enriched in gold, depleted in copper. That gets mined off first, goes onto a gold heap leach, but the real value is in the mill reserve. Mill reserve, 1.2 billion tons at 0.4% copper equivalent. I want to point out that that is 1/3 of the known resource. So when we're talking about this mine has a 27-year mine life, but we have over 75 years worth of material identified with this one deposit. And it's still open at depth, and it's still open at the northwest. So there'll be a mine here for 100 years. 0.4% copper equivalent, it's an okay grade. But really, the key to this deposit is the core zone. And when we look at the core zone, grades are quite a bit higher. And when Rio dictated the drilling program in 2021, we drilled that core zone. You can see the drill results we got. Over 300 meters of over 1% copper equivalent. Next to that, 66 meters at over 2.5% copper equivalent. This has very much greater grades. We can put a resource around that core zone. You're looking at 430 million tons at close to 0.6. That is a very exciting grade. That's what drives the economics of the project, and that's why the economics look so good. And when we look at the grades, you know, from the mine plan, you look at over the first 4 years, you're actually mining 0.65, then that drops down to that 0.4 over the life of mine. But when we look at open pit copper gold mines in Western Canada, Copper Mountain, Gibraltar, Highland Valley, they're all mining 0.2 to 0.3. Redcrest, Mount Milligan, newer mines, they're running a little bit higher, but neither of those are looking to mine the grades as high as what we have in the first 4 years. What's going on with my clicker here now? Oh, there we go. When we look at the feasibility study, again, this is less than a year old, so this has got inflated values for diesel and steel and all that in it. We're looking at a 2.3 billion net present value and 18% IRR after tax. The other key to this is the strip ratio, 0.43 to 1 strip ratio. This is a best-in-class strip ratio. It's another key aspect of the deposit that makes it work as well as it does. That early high grade gives us payback in 3 years, and as I said, it's a 27-year mine life. This is at the conservative long-term values of $3.60 copper and $1,700 gold, at $14 moly and an 80-cent dollar. When we look at this at spot, so this is copper at $3.90, gold at $19.50, moly, which now is $33 a pound, and the Canadian dollar, which is weakened to 74 cents, you're looking at a $5.7 billion net present value and a 28% IRR after tax. This is a very robust project, very leveraged to copper and gold prices and the Canadian dollar, and really a spectacular return. The early high grade shows up when we look at cash flow. You're looking at cash flow of $950 million a year initially, and then that dropping to $500 over the life of mine. Cash costs, best to look at co-product cash costs. You're looking at cash cost at a little over $1.50 per pound of copper, a little under $800 per ounce of gold, which are very, very attractive. This project, large project, $3.6 billion capital cost Canadian. Again, this is a project that we've been moving forward, but really it belongs in the hands of majors such as Rio Tinto. So, as I said, four key things. You're looking for size, we're looking for economics, we're looking for a jurisdiction anybody wants to build a mine in. The last, and I would say the most important part, is actually, what we call social license, or to a certain extent, the ESG aspects of the project. So, on the social side, we've been working up in the Yukon for a number of years. We've got early stage agreements with most of the First Nations. We've won actually some environmental awards, good governance, support a number of initiatives up in the Yukon. This is great. Everybody's got their ESG slide. What not everybody has is actually some real world examples. So this is one of them. So this go back to 2015. There was two major tailings dam disasters, Mount Polley in British Columbia and Samarco in Brazil. On the back of that, the First Nations came to us and said, look, we're not comfortable with the tailings dam that you have designed. Not because there's anything unique about our tailings dam, but they just, tailings dams were viewed with a lot of suspicion. We said, okay. We sat down, we went through what's called the BAT study, so Best Available Tailings Technology Study. 2 years. We started off with 495 different options for tailings and mine waste, and we whittled it down to one. Lots of good engineering in here, but more importantly, this isn't just my design for the tailings facility. It's a design that has been developed with significant input from the impacted First Nations and the regulator. The other one is the access road. So we need to build 200 kilometers of new access road. A good portion of that is actually upgrade. And we negotiated with the government, and they announced that they would support some of that access road. So this is a big announcement. The Prime Minister of Canada came to town. This is the end of 2017. The person standing next to him there was the Premier of the Yukon at the time, made a major infrastructure announcement, 3 roads to resources. What does it take to get the Prime Minister of Canada to make an announcement like this in the Yukon? I can tell you what it takes. Every one of the impacted First Nations needed to sign off conceptually on these roads before he'd make the announcement. He doesn't want to make an announcement and then have everybody protesting the next day about this. So all of them needed to sign off. Flash forward to last year, a definitive agreement with the First Nation was signed on the access road. That access road is under the first part of the access road. It's the first 20 kilometers. That's a $30 million contract, is under construction as we speak. Last development here, and I only have about a minute, is, and this is brand spanking new. I don't even have a press release on this. This is just, the latest development in the Yukon is power. So for our project, we're looking at bringing in liquefied natural gas and using that to generate power. That's what's in the feasibility study. However, there's a major initiative to connect the Yukon grid, which is an isolated grid without any excess power, to the BC grid. This is really beginning to take off. It's a 760 kilometers. This is a big project. This is a government project. But in the last federal budget, they had money to look at green power from coast to coast to coast. That's Canadian speak for the Pacific, Arctic, or Pacific, Atlantic, and the Arctic, and essentially means green power for the north. So we're excited by this. It's an absolute game changer for our project. For those of you that were here for the previous presentation and Brandon's projects, this will be a game changer for him as well. In the interest of time, I'll just sort of pop here to the end. This is a significant copper gold project located in the Yukon, clear path to value over the next year. Obviously, probably the most exciting news is what's going to be next with Rio Tinto, where we're going to be working hard on submitting our EA proposal and hopefully enjoying better copper prices as we move forward. So thank you.
Yeah, wonderful. Fantastic presentation there as well. Do we have any questions for Paul here? I have one. Right now, are you more Western copper and gold or Western gold and copper?
You know what? That's an interesting question. There's only been one point where we were more gold than copper, and it was, I'm going to say, beginning of 2016. And the price of gold had gone up. I can't remember what it was, but copper had dropped to $1.90 a pound. And we were actually, more of our revenue came from gold than copper. But yeah, it's still always primarily a copper mine.
Fantastic. Awesome. Thank you so much,
Thank
Paul.
you.
Looking forward to visiting in the summer, actually.